Ever wondered how companies you've never even interacted with seem to know so much about your financial life? Like, how does Equifax, one of the three major credit bureaus, get all that information about your loans, credit cards, and payment history? It can feel a little like a mystery, right? That's exactly what we're diving into today. We live in a world increasingly driven by data. Every time you apply for a loan, a credit card, or even a cell phone contract, you're creating a digital footprint. This footprint contains valuable information about your financial behavior, and it's this information that ultimately ends up in your credit report. Now, it's important to understand that credit bureaus like Equifax aren't spying on you in some clandestine way. They're collecting information from legitimate sources that you've likely interacted with directly. Before we get into the specifics of Equifax's data collection, let's quickly recap what a credit bureau actually does. These companies are essentially repositories of consumer credit information. They collect data, compile it into credit reports, and then sell these reports to lenders, landlords, employers, and other businesses who need to assess your creditworthiness. This helps them determine the risk associated with lending you money, renting you an apartment, or even offering you a job. So, how does Equifax get its hands on this data? The primary source is what we call furnishers. These are businesses that you have a financial relationship with. Think about banks, credit card companies, mortgage lenders, auto loan providers, and even collection agencies. These entities regularly report information about your accounts to the credit bureaus. Let's break down the types of information that furnishers typically report. First, there's identification information. This includes your name, address, social security number, date of birth, and employment information. This helps ensure that the credit report accurately reflects your financial history and not someone else's. Next, furnishers report information about your credit accounts. This includes the type of account, such as a credit card, mortgage, or installment loan, the date the account was opened, the credit limit or loan amount, the current balance, and your payment history. This payment history is crucial, as it shows lenders how reliably you've been making your payments. Payment history is arguably the most important factor in your credit score. Furnishers report whether you've made your payments on time, whether you've missed any payments, and how late those payments were. Even a single late payment can have a negative impact on your credit score, so it's essential to stay on top of your bills. Another important piece of information reported is public records data. This includes things like bankruptcies, tax liens, and court judgments. These are matters of public record, and credit bureaus collect this information from various government sources. These records can significantly impact your credit score and remain on your credit report for several years. Collection agencies also play a role in the data collection process. If you have an outstanding debt that's been sent to collections, the collection agency will typically report this information to the credit bureaus. This can also negatively affect your credit score. Now, it's important to emphasize that Equifax doesn't just randomly collect information. There are strict regulations in place to ensure the accuracy and privacy of consumer data. The Fair Credit Reporting Act, or FCRA, is a federal law that governs the collection, use, and disclosure of consumer credit information. The FCRA requires credit bureaus to maintain reasonable procedures to ensure the accuracy of the information they collect. It also gives consumers the right to dispute inaccurate information on their credit reports. If you find an error on your Equifax credit report, you have the right to file a dispute with Equifax, and they are obligated to investigate and correct the error if it's found to be inaccurate. Furthermore, the FCRA limits who can access your credit report. Only businesses with a permissible purpose, such as lenders, landlords, and employers with your consent, can access your credit report. This helps protect your privacy and prevents unauthorized access to your sensitive financial information. Another key aspect of the FCRA is the right to obtain a free copy of your credit report. You're entitled to a free credit report from each of the three major credit bureaus, Equifax, Experian, and TransUnion, once every 12 months. You can access these reports through annualcreditreport.com, which is the official website authorized by federal law. Regularly checking your credit reports is crucial for several reasons. First, it allows you to identify any errors or inaccuracies that may be negatively impacting your credit score. Second, it can help you detect signs of identity theft. If you see accounts or inquiries on your credit report that you don't recognize, it could be a sign that someone has stolen your identity and is using your credit. Beyond the FCRA, other regulations, like the Fair and Accurate Credit Transactions Act, FACTA, further enhance consumer protections. FACTA provides additional rights related to identity theft and also allows consumers to place fraud alerts and security freezes on their credit reports. A fraud alert requires businesses to take extra steps to verify your identity before opening new accounts in your name. A security freeze, on the other hand, prevents access to your credit report altogether, making it much harder for identity thieves to open new accounts. So, to recap, Equifax collects your credit information primarily from furnishers like banks, credit card companies, and lenders. They also collect public records data and information from collection agencies. This information is then compiled into your credit report, which is used by businesses to assess your creditworthiness. Strict regulations like the FCRA are in place to ensure the accuracy and privacy of this information, and you have the right to access your credit reports and dispute any inaccuracies. It's important to remember that your credit report is a valuable financial tool. Understanding how it works and how information is collected is crucial for maintaining good credit health. By regularly checking your credit reports, disputing errors, and practicing responsible credit management, you can take control of your financial future. With that said, thanks for watching, and until next time.